All right. This little video is going to be about how to compare relative performance because you want to be in the best thing. I'm going to start covering gasoline, food. The food ETF includes soy, corn, sugar, and wheat. They actually represent the commodity, so I wanted to start covering that. Just to watch out which takes off first for this hyperinflation thing. I also want to cover my favorite gold mining stock, Yamana Gold, AUY, just to have some exposure to gold without actually owning gold, because you should own silver because it's going to outperform very well. Of course, I'm going to cover gold, I'm going to cover silver, and I'm going to cover oil. Gasoline will always outperform oil. I just want to keep an eye on oil, but if there's a buy opportunity, I'd rather own gasoline because the market's a lot smaller than the oil market. So anyway, this first chart you're going to look at is a 1-year comparison between gasoline, oil, food, Yamana Gold, gold, silver. The very top line there, the mauve, kind of the purpley line, that represents gold over the last year. It's down 10%, down about 8% actually. The blue line is silver. Silver is about down 35%. Keep these numbers in mind as I go. The yellow is the food, the DBA, the food ETF, and then the actual stock where you see the little candlesticks, that's gasoline. The orange line is Yamana Gold, and the gold line at the very bottom is oil. So we can see what's been winning. Gold is outperforming over the last year, then silver, then food, then gas, then Yamana Gold, and then oil. That's over the year. So now we're going to switch over to, we're going to cut that time in half to see what's going on with the charts. Now if you see something a little different here. You see that gold is still winning over the last 6 months, but silver's gained a lot on gold, relatively speaking. And look what Yamana Gold has done. It's lifted way up with gold and silver. And the food has pulled away from the oil and gasoline. And finally, gasoline's kind of moving sideways and oil is still kind of dwindling down. So you see, a year ago, these metals weren't as strong, and over the last 6 months, the first 6 months of the last year, they've started building momentum, and gold is still in the lead. So we're going to take 6 months, and we're going to cut that down again in half. I don't know how well you can see this, but you can see that the Yamana Gold has pulled out into the lead for the last 3 months. And then silver, then gold. Well, actually gasoline just passed gold, then food, and oil is still at the bottom. But you can see that Yamana Gold, the momentum has starting to outperform the metals, and silver is outperforming gold over the last 3 months. You'll probably never see silver above Yamana because it's just higher risk, and usually the mining stocks outperform the metals. So we're going to cut that down into a third, down to 1 month. We're really going to see a picture here. I know you can't really make this out. Let me tell you, gasoline is now in the lead, followed by silver, followed by gold. I can barely see it too. Followed by oil and food, and Yamana Gold is lagging behind. So I guess you will see silver over Yamana just over the last month. You've seen gasoline pull out into the lead, but silver is still a close second. So this will kind of give you an idea on relative momentum. So now, after doing this, if I want to know what kind of which is going to outperform in a period of hyperinflation, I can go back a year, 6 months, 3 months, and then a month, and I can see which commodity which commodity is building steam, and that's the one I want to be in. And right now, today, it would be gasoline, but gasoline is kind of moving sideways, so silver still looks good. Let me see. I'm going to switch over to a different. I'll show you guys a couple of these charts. Look at this is like a 400-year chart of silver compared with the gold-silver ratio. The blue line is silver, and over, I think it's 200 years, a long time ago anyway. That's priced in $1998. And the gold line is the gold to silver ratio. It's higher now. It's went back up to 70, but you can see that historically it's very low. And just over the last several decades, has gold outperformed, and you see how much silver has underperformed. But you can always see that silver had a bottom at $4, and It just, you see how much higher it can go. Once a commodity, or once an entity goes up to a certain price, it's a lot easier to get back to that price. And then it takes a lot of energy to move past that price. So you can see how high silver was at one point, up to, was it $700-800 an ounce in $98, if I'm reading that right. I'm going to bring that chart up so I can. I'm still learning this stuff, man. Let's see, where is the. Here it is. Let me bring that chart up so I can see it. Come on. Come on. Oh, there you go. Come on. God, I love Windows Explorer Vista. It's just fantastic. God, miserable. Miserable. It's not bringing it up. That's right. I kind of see it. So that gives you that silver and the gold ratio have to come into the middle there, and it looks like the trend for gold-silver ratio is moving downward, which is good. Good for us. This chart, look at this. Job losses in recent recessions. The blue line, I think, is 1990 recession, and 2002 is the red line, and the current recession. Look at the nosedive we're taking. And that's just job losses. So you can see that normally we'd start to recover long ago, losing jobs, and this is just taking a nosedive off the planet. So might freeze and look at that for a minute. I'm going to show you this other chart here. History of home values. You can see how high. I think it goes back till 1890 when it came down to the low here. This was during the Great Depression, and then it finally went back to normal. And now look, you can see at the top is pretty much a joke, and it's only come down to the bottom of the solid line. But look how much further it can go, and that's only if it levels off. Just imagine how low it can go if we have another depression. Houses can come down under 100. The median price will come down under 100,000, and that's what we silver owners want. We want real estate to come down so we can trade our silver for real estate. That's the plan, and I think it's a good plan. So, because you can't hold silver forever, it's going to peak at some point, just like it did in the 80s, and then you're going to want to be in something else. You're going to be on the next elevator up. You don't want to be on the elevator going down. So, I guess that's going to do it for now. Hope you learned something. Just give me any kind of questions you want. I'm using big charts for my comparison, relative strength comparison, and you can do that with any kind of stocks, any number of stocks, different sectors, anything you want. So stay tuned tomorrow. Hopefully we'll get a buy signal tomorrow on silver. See you later.